Welcome everyone to the Settle In Live session. My name is Chiamaka Gali and I'm the Virtual Events Manager with Settle In. Today, we have partnered with IRC SAFE to offer a two-part series on taxes in the U.S. Please remember when commenting during this live session not to share any personal or confidential information as we are public-facing. Understanding Taxes series. In today's session, we will explain how to prepare for yearly tax return filing, including who needs to file, what documents you should prepare, where to go to get your taxes completed, and how to avoid tax-related scams. Part 1 of this series gave a general overview of taxes, including different types of taxes, what taxes pay for, and how we pay taxes throughout the year, which can be accessed on the Settle In Facebook page or the Settle In YouTube page. What are taxes? Let's review a bit from Part 1, starting with an overview about taxes. Tax is money that is paid to the government to help pay for different government services and goods. Because of the different levels of the U.S. government, you pay federal taxes, state taxes, and may even pay taxes to your city or local government. At a national level, taxes are monitored by the Internal Revenue Service, or the IRS, and on a state level by your state tax authority. Why is it important to pay taxes? Taxes are important in many ways, the first being that this is money that finances government programs and services, which most of us use day to day. These services are meant to support services that we all share together as a community. Paying your taxes is also considered part of people's civic duty in the U.S. It is required by law and meant to be seen as a direct contribution to your community. Not paying your taxes can have negative repercussions. To be eligible for certain benefits, like Social Security benefits at retirement, you have to show that you've paid taxes for a certain number of years to be eligible. Lastly, if you're completing certain immigration application or status changes, they may ask to see records of your tax returns or show you've paid taxes. To avoid any stops or pauses in the process, it's good to pay those taxes and have that record. To learn more about why taxes are important, types of taxes, and repercussions of not paying taxes, see or access Part 1 of this series on the Settle In Facebook page or Settle In YouTube page. Yearly tax return. Now we're going to talk about filing your tax return. Your tax return is documentation that you file with the IRS and local tax authorities, which show all of your income, expenses, and other relevant financial information from the last year. Your tax return calculates your tax liability, or how much you should have paid for taxes, and compares that to what you've paid throughout the year. This return determines whether you paid the right amount of taxes, overpaid, or owe money. Tax returns are completed between the end of January through mid-April every year. This year, they start accepting returns January 23rd of 2024, and the deadline for IRS to receive your return is April 15th of 2024. Filing your return every year is important, as it will determine if you meet your tax responsibilities. If you didn't pay enough, you'll need to pay additional money to tax authorities, or you may have overpaid and will get money back. If you're employed with a company, either part-time or full-time, typically taxes are taken out of your paycheck. If you're self-employed, it's important to pay taxes throughout the year and be as accurate as possible because you don't want to owe money and might get some money back. Who must file a tax return? The IRS has requirements for who must file taxes every year. Most income is taxable. The money you earn from work, from a business, self-employment, unemployment, and even money that you're paid in cash for performing services or selling goods is taxable. If you're working for a company located outside of the U.S., you also have to report this income for your tax return. Public benefits like SNAP or cash assistance, support from an organization like a resettlement agency, child support, and any gifts less than $17,000 are not taxable income, so you do not need to report these for taxes. You're required to file your taxes if you are single and have a taxable income of $13,850 from a job. If you are married and filing together, you're required to file a tax return if you make over $27,700,000. There is a higher income requirement if you're older than 65. If you have self-employment income, for example, if you own a business, work a gig job like Uber or DoorDash, perform other services for payment, and earn more than $400, then you're required to report this income and pay taxes on it. This includes any income you get in cash which you're supposed to report and pay taxes on. Why should you file your taxes? Even if you're not required to complete your tax return this year, it may benefit you. The first benefit is you could get money back. You may have paid too much in taxes during the year and get a refund or money back when you file your tax return. You'll avoid any interest and penalties by filing an accurate tax return on time and paying any tax you owe in the right way before the deadline. Even if you can't pay, you should file on time or request an extension to avoid owing more money. An accurate tax return can make it easier to apply for assistance with education expenses. If you're applying for student aid, the FAFSA financial aid form pulls in your tax return information. Paying your taxes builds your Social Security benefit. You need at least 40 credits, which is about 10 years of working on file, to be able to claim full Social Security benefits when you're older. It'll also give you an accurate picture of your income. You can use it when applying for benefits, credit, or loans. If you file accurate tax returns, you may even get a loan with a lower interest rate and better repayment terms. Generally, when you file an accurate tax return and pay your taxes on time, you'll have some peace of mind knowing that you're doing the right thing to follow the law. Tax refund, credits, and deductions. We mentioned that by filing your tax return, you may get some money back. This is called a tax refund. This can happen if you've paid more than you had to during the year or because you're eligible for credits or deductions based on your situation. It's always nice to get some extra money back. A credit reduces the amount of taxes you owe based on specific factors, for example, the number of children you have or your income. On the next slide, we'll talk about a few common credits. Deductions are items you can subtract from your taxable income to lower the amount of taxes you owe. Some common examples for individuals include education expenses like student loan interest, certain healthcare costs, and contributions to retirement accounts. Deductions are especially important for people that are self-employed or own a business, as there is a lot of business-related expenses you can include to reduce the amount you'll owe in taxes. We can't emphasize enough how important it is to track your business expenses throughout the year so you'll have an easy time claiming these deductions when filing your taxes. When completing your tax return, you'll generally file for both your federal and state taxes. Your tax preparer will ask you questions to help determine if you're eligible for any credits or deductions in your tax liability. If it looks like you paid too much, you may receive money back from the federal or state government. EITC, Child Tax Credit, Child Independent Care Credit. We'll give 3 examples of tax credits that some of you may be eligible for. There's the Earned Income Tax Credit and the Child Care Tax Credit. The Earned Income Tax Credit, also known as EITC, is a reduction in your taxes for low-income families. To be eligible, you must have earned income, meaning at least $1 from employment or self-employment, and be under a certain income amount. Additionally, you must be considered a resident in the U.S. according to the IRS, which means you are a citizen, you have a green card, or are living in the U.S. for at least 181 days or 6 months. If you have arrived after that, you are technically ineligible for this credit. For the 2023 tax year, the earned income credit ranges from $600 to $7,430, depending on your filing status and how many children you have. The Child Care Tax Credit is a reduction of taxes for low-income families with qualifying children. For the Child Tax Credit, or CTC, a qualifying child is a child 13 or under who lives with you for at least half the year, and you are responsible for paying their expenses. Like EITC, you need to be under a certain income level to qualify and be considered a resident by the IRS. The tax credit is $2,000 per qualifying child. The Child Independent Care Credit is a reduction in your taxes for people with earned income that are spending money on care for a qualifying child or other dependent. There are a few main requirements to keep in mind for this credit. You must have earned income or income you've gotten from a job or self-employment, have a dependent that fits the qualifying criteria, and be paying for care. Throughout this, you can get up to $3,000 per qualifying individual with a maximum of $6,000. Like EITC, you need to be under a certain income level to qualify and be considered a resident by the IRS. There are a few other specific requirements for this credit, so what's most important is you bring any documentation you have on child or dependent care expenses with you when doing your tax filing. Credit and refunds may be different each year. It is important to note that the credits you receive and any refund is likely not going to be the same each year. There's a few reasons for this. The first is that tax law changes. Almost every year there's an update to a tax-related law which may change what you're eligible for. How much you receive also depends on your income and your family situation. You may earn more money this year or have a child or start taking care of elderly parents. You may get married or buy a home. All of these factors could affect how much you pay in taxes, as well as your eligibility for credits and other reductions of your tax liabilities. It is important to not compare your refund amounts yearly, but to check to make sure all the information you provide for tax filing is complete and accurate. What to do with your refund? If you do end up getting a refund, that's great. We always say tax refund season is a perfect time to think about your goals, and this refund could be an important step towards those goals. Some ideas on what to do with your refund include develop an emergency savings fund to have in case someone in your family needs to stop working, emergency flights to visit family, or for necessary repairs. It's recommended to save up to at least 3 months of your expenses in case any of these situations occur. You could also use the refund to pay debts or outstanding bills. You could pay upcoming bills like prepay rent for 1 to 2 months or put a larger payment toward a loan you have. You could put this money into savings for a future goal like education or a home. If you want to learn more about types of accounts and financial products to help you grow your money, you can go to safeirc.org and watch their Grow Your Money video, which is currently available in English. Lastly, if you want help in figuring out what to do with your refund, you can always meet with a financial coach. We'll share how you can schedule a meeting with a coach at the end of this presentation. How to file your taxes. Tax filing might feel overwhelming, but there are some resources to help you. First, there's the Volunteer Income Tax Assistance Program, which offers free tax preparation for families that make less than $60,000 per year. VITA can help you prepare your tax return in person or remotely. The IRC has VITA programs in New York City, Dallas, Texas, Salt Lake City, Boise, Idaho, San Diego, Missoula, and Montana. To make an appointment at the IRC VITA program, you can go to rescue.org/VITA. There are VITA programs in most cities across the U.S., and you can find the closest one to you by going to irc.gov/free-tax-prep. If you'd like to file your taxes yourself with some support if you get stuck, you can go to myfreetaxes.com. Lastly, if you have a more complex tax question, for example, you have multiple businesses or investments, you can go to a paid tax professional with an accountant or accounting businesses like H&R Block. A note on going to a paid tax preparer. There are some scammers out there or people that take advantage of taxpayers to get more money. These scam tax preparers try to get more money for themselves by requesting to be paid a percentage of your refund, and they'll often complete your return incorrectly, so the refund is large. What documents to bring? When you've decided how you'd like to complete your return, you'll want to prepare all of your documents for the return filing. It's a good idea to have everything ready in one place so it'll be easy to find for tax season and easy for the person preparing the return. To complete your tax return, you'll need Social Security cards or tax identification numbers for everybody that will be on your return and photo identification. You'll need your income and earning documents. If you're an employee of a company, they will provide you with the W-2 form in January, which includes all the taxes deducted from your paycheck throughout the year. If you receive Social Security income or unemployment income, you'll need to bring those documents as well. If you have self-employed income, you will get a 1099 from the company, a 1099-K if you earn income online through Uber or Lyft, or you can provide receipts that you filled your quarterly taxes. You'll also want to bring documentation for any deductions you may have. For example, car expenses or mileage for mileage deduction calculation, which can also include receipts, trackers you use, or if you use an app, bring that information too. If you worked any other jobs that didn't report, like cash jobs, you'll want to come prepared with the total amount you earned. If you're filing for your spouse or your children and dependents, you're going to have to bring their documents too. Lastly, you'll want to bring your bank account information so that they could do direct deposit for any refunds you receive. There may be more documents that you need to bring to verify the information on your return, which are state specific or on request for IRS. We've seen instances where they've asked for birth certificates for children. Tax scams. Now that we reviewed everything about taxes, including how to file your tax return, the last topic we want to talk about is tax scams. A scam is a fake inquiry or story to trick you to share your personal information or financial information so that they can take your money. Scammers increase their activity during tax season, and they'll try to use tax preparation in their story to get your money. Scammers will usually call, text, or email you claiming that they are the IRS, a tax preparer, or another official agency with a convincing story asking you to share your information. There are some ways for you to spot these scammers. First, the IRS will never call, text, or email you. They'll usually send communication via the mail. If you get a call claiming to be the IRS or an email telling you to click a link to get a refund, it's likely a scam. The IRS includes a list of common scams on their website, so you can check there to see if the communication is real. Scammers will also ask for your personal information, your social security number, bank account, or ask you to complete a financial transaction to share your information. If someone is asking this, then it's likely a way to try and steal your information. Scammers will also demand immediate payment. For example, they'll call and say, "Hi, this is the IRS and you owe $500 for your tax return. What is your bank account number and we will fix this right away." This is a scam. The IRS won't call you and they won't ask you to pay immediately. Scammers may also promise some type of reward for sharing your information or clicking a link. For example, this person got an email saying your economic impact payment is available. Click here to claim your money today. We all love to get free money, but good news like that will not come from an email. Lastly, another common tactic that we see with scams is that they threaten an immediate consequence if you don't act now. They say they'll alert the police or take your home. These calls can be pretty scary, but again, the IRS would not threaten immediate action against you or in this manner. The police will not come after you for paying the incorrect amount of taxes. If scammers contact you, you can do a few things. Ignore it, read the information, then delete it. You can also block the number so they stop bothering you. Don't give out your social security number or bank account information without proof the person is who they say that they are. If on the phone, you can ask them for their contact details, name, and a callback number, and say you're going to check on this, then hang up. You can then take some time to research, check on the IRS website, even search the number to see if it's real. Likely, they won't want to give you this information, and that's a clear sign that they're lying. If you get an email, don't click any links or open anything. Check the email address. If it looks funny, has a lot of numbers and letters, or doesn't end in irs.gov, it's not from the IRS. You can delete the email. You can report the scammers to the IRS and the Consumer Financial Protection Bureau as well as so they can update other taxpayers with this information. When in doubt, do some research and see if it's a legitimate issue. You can call the IRS, check their website, and investigate before sharing your personal information. Serious information and safe. Part 1 and 2 of our Understanding the U.S. Tax System is available online on the Settle In page. The IRC has offices in more than 25 U.S. cities offering financial classes and one-on-one financial coaching to discuss your financial situation. For more financial classes on topics such as this, or to meet with a financial coach, go to www.rescue.org/where-we-work, select United States, and select the office nearest you. I'd like to thank you for joining us for the Settle In Live event. We covered a lot of information. You can return to this recording after the event to review the information again. We also encourage you to follow the Settle In Facebook page for the latest information you need to know as you adjust to your new life in the United States.